what happens in Europe now? Is this really? I'm going to ask you a hopeful question. I'm going to lead you a little bit.
Okay.
Is this the beginning of the end for the European sovereign debt crisis?
No, it's a step in the right. It's a step in the right direction, but the problem is they still have to finalize the details of how they're going to come up with the 325 million euro cuts that the EU basically has demanded last week. So the EU,
even though they came up with a plan and passed Parliament. Wasn't that part of the plan? How come there's...
Well, the devil's in the details. You can say you're going to cut, but now how are you going to actually do it? They've agreed to make the cuts, but they haven't suggested on the exact details of how those cuts are going to come. And as you can see by the riots and by buildings being set ablaze, that where those cuts are coming from are very, very unpopular.
And that's what the Germans want, right? The Germans want to see, and the rest of the EU, they want to see the implementation. They want to see those details.
Yes.
How much longer are we going to go on with this? That's the question. I mean, you didn't see a big reaction in the euro today to this.
No, it was modest at best. I mean, I think you're looking.
The euro is actually down right now to the dollar.
The euro, there's a very, very large short positions in the euro. So without subsequent news or some other push, or frankly, maybe an Asian central bank or some sovereign wealth fund dumping their holdings of euros, the next big push is going to be difficult to see. You're probably going to be in a 127, 132 range for a bit.
We've got this 14.5 billion euro
March
payment
20.
coming up on March 20th, right? At some point, you reach a point of no return, presumably, where the implementation, everything needs to be in place. Mm-hmm. Do we see markets start to sort of get to that threshold and trade differently when they sort of feel like that the time is running out?
I'm kind of confused as to why they don't see the time is running out already, to be perfectly honest. I mean, you think the perception is they're going to make that payment. They're going to somehow dance around these cuts, delay and delay, get to March 20th. The 14.5 billion euros is going to be given to Greeks. They're going to pay off the maturing debt, going to roll it over again. But as Mike and I were talking about this morning, column I'll be writing today, the next step comes in April. We have elections in France and in Greece that may topple the whole accord.
We saw Samaras yesterday, the leader of the New Democracy Party in Greece, say that he would vote on this, but he would want to see it renegotiated after the elections, which must leave the Eurozone finance ministers feeling very uncomfortable.
And it should leave investors uncomfortable. You have the same situation in France, where the current leader in the polls is Francois Hollande, socialist radical left party leader, who's promised to renegotiate the treaty that was signed in December of last year on the 9th, and has basically asked for the creation of a European bond to take over all of this debt, which is very much against what the Germans.
The Germans don't want it. It wouldn't be a bad idea, but the Germans don't seem to want it. So I mean, it's a.
And to top it all off, you have Merkel campaigning for Sarkozy. If Sarkozy loses the election, she now has to deal with a president who she basically campaigned against.
On the other side of a border that she campaigned against.
Yeah,
I mean, it's amazing because we published a calendar last week saying that today was the deadline for this formal bond exchange offer from the Greeks. It seems like these deadlines don't mean anything when they come and go. Does the market care anymore? I really have to ask that question. Do they believe anything?
Honestly, we're talking this morning about how many bailouts this has been. I've lost count. How many deadlines? I have no idea. The EU ministers meet on Wednesday. It's supposed to be a rubber stamp based on this.
Preliminary approval.
Preliminary approval.
Formally approve it later on. Yeah.
So the preliminary approval will likely come on Wednesday based on the parliamentary vote of last night. The PSI negotiations then take place on Thursday and Friday. Whether or not the collective action clause is instated or not, it's in abeyance, it's ready, it's there.
Meaning that any of the renegade bondholders who don't take the deal will be forced to take it, which really puts the whole voluntary
thing. We had S&P say on Friday that they would immediately, even before they implemented it, cite Greece to be in default at that point. So that creates all sorts of complications.
It's a whole other conversation, exactly.
There's so many different moving pieces.
It's unbelievable. I mean, I don't see how Greece avoids default, and I don't see how cutting their debt to GDP ratio to about 120% within 8 years does anything to solve their problems.
They avoid default by the Eurozone writing another check, and they will write another check, basically. That's what the market's betting, is that at the end of the day, they're just going to say, all right, here it is.
But even if they write
they'll
that
do it
check
again the next time, they'll do it the next time.
You're still talking about taking such a loss on those original bonds. How that's not a default is beyond me. I'm a very simple man. Maybe I don't understand complex financial
if you did it willingly, supposedly not.
Willingly,
yes, right.
air
This
quotes.
is the question.
Yeah.
Air quotes.